Channel. So we're going to look today at a quick recap of 12/23 Thursday supply and demand zones and one trade that I took personally. Just looking over that, but first we'll go over just a quick recap if you're new to the channel what supply and demand is. So supply and demand is a market imbalance, largely due to institutional buyers that cause price to move up or down. It's around where an institution is trying to buy or sell shares at a certain price, and they have large order quantities and they can't get all of their orders fulfilled before the price moves. So when the price comes back to that zone area, then they're able to fill their orders, which then cause the price to move again in that direction. This can be plotted on any different time frame you prefer, from the weekly, daily, 4 hour, 3 hour, 2 hour, 1 hour, 45-minute, 30-minute. Typically, the lowest I go is 15-minute. Sometimes we'll do a lower 5-minute on intraday, looking at a pullback or something. Those are good zones, as well as any rally-based rallies for any quick scalps off the 5-minute. So looking at demand, you want to look to the left of the chart and look for a small red basing candle. So this candle here, followed by a large move to the upside. So you draw the zones from the top of the base to the bottom of the wick. So you look at the open of the candle to the low of the candle, and then you draw your zone over to the right. Then you wait for price to come back. So here on this example, the next day price came back and touched the zone here, and then you could have looked to take it long at this point for a rally up from that. Same with supply. So you look to the left of the chart, or you're looking for a small green basing candle, looking from the open of the candle to the top of the wick, and then you draw your zone over, and then you wait. So it could be days, weeks, months. I think example for like Boeing, we formed a 1 hour supply like back in September, and we'd been hitting it, and then it finally broke today. So we can look at that, but it can be zones that you have out there for weeks or months before it comes back in that zone, and then it can be retested again. So that is a quick rundown of that. So we will go into Thinkorswim and look. So here is just an example of Uber that I had pulled up when I was looking. So we had a daily demand here, and you can see constantly we were in this channel of daily supply, which if we look back, this formed all the way on February 24th. We formed this daily supply. So it was a small green candle up from the base of the candle to the top of the wick, and we drew it over, and we tested it once here, and it rejected, and then started testing it again constantly in this channel, and then we had this daily demand form. But then you see here it finally gapped up and broke above this zone. So this zone is technically now invalid. It was still valid all of these times when we were channeling in between this $38 and $34 price. And then after earnings, it gapped up and then has since ran to $53. So these zones can now be removed. So once they're no longer valid, you can remove them. This demand zone will still be valid because we never broke below that zone. But then up here, you can see we formed new daily demand right here, followed by this big rally. So we can actually add this to our chart. So we'll zoom in so we can get better. So we want from the top of the wick, or top of the open of the candle. Typically you do to the bottom of the wick, but I like if we have a big move at the candle, I either go to the wick of that candle for demand below, or if it's a supply zone above, if we hit that zone. So then you would just draw your zone over, and like that. So I have mine already defaulted to green. just for demand zone, and then we're going to add a price level. So you want to add it on the open of the candle. So this opened at $50. So we'll put that there, and then we will edit this price level, and we'll put that at $50. And this was daily. So that gives you a daily demand right there, that you can then wait for price to come back down, hit this $50 to then take long, however long it takes before that happens again. And then worst case, you have a 1.5 point range that you're looking at, or you can look to take it with smaller risk depending on when it trades intraday, low of day, or however you want to manage your risk on that when it does happen. So we can look and see where we formed supply. So we want to look for a 1 hour or a small green candle followed by a drop. So we're probably gonna have to go. Let's look like for an hour time frame. Let's zoom out. So you could technically use that, but that's not very small. Let's see. Yeah, even that. I mean, we gapped above, but we've still haven't got respect over here, so I wouldn't even use that. You're probably gonna have to get down to, you may not even be able to get a good, so you could use this here. So this could be our supply zone. So we could do that from here up to our high. And then we want to make this red. So you usually use that pink and then go to more and do our saturation to 75. And then we'll put our price level at the open of this candle, which was $52.98. Which I got. And that was 15-minute. And we want to make it red, the pink color. So we have that. It's not the strongest zone, but that was the best one that we could get from this supply area, which you can see we kind of based in here and then dropped. You could even have another supply zone right here at this level, but it's not the strongest zone, so you would have to, we haven't formed the best one. So now we'll go look at some trades from today. So an example in Palantir, we formed a 3-hour supply right here at this drop that we had on the end of the day from Wednesday to the drop on Tuesday. So if we go to the 3-hour, you can see this zone. So right here off this green basing candle, and then we dropped at the open the next day. Then we also do have on Palantir a 45-minute supply up here that formed. It really could run all the way up to the all-time highs, but this was the 45-minute zone, which is from this huge rally that we've had. But if we go into a smaller time frame on the intraday for today, go to the 5-minute here, then we can look at today. So we gapped up. So this was the gap up from yesterday's high that we had. So we gapped up above that and stayed above that. And then we had this huge rally to the start of the morning. And then we got this, hit this zone. And then after we hit it and then immediately rejected and started coming down. And then we came down the rest of the day. So typically traders would look to take be taking high of day breaks. So we broke here, high of day, but you only had a 50-cent move that we had. So if you're looking at trading supply and demand, you would know that you had this supply zone up here and would not look to take this long from here off this rejection. So you could have taken this short and ended up with, look like we dropped to 23.73, so from 25.50-ish area. So you had about almost a $2 move in the stock out of that supply zone. So that would have been a good trade for that if you took that short out of supply. Another one is AMD that I noticed today. So we had formed 45-minute supply here. Let's see. So we have 30-minute here as well as 45. So let me get to the 45. Don't have it on this computer. Just so we can see the actual zone. So then we have here, it's not the largest drop here, but then we have the drop at this zone. So we created this supply zone here. It's really a drop, a base, and a drop. So you get that confirmation on a supply zone here where price leveled out, and then we dropped off that. So that created our supply. Now if we go to our 5-minute, we rallied right into, rallied right into that zone at the open, which is not the best to trade at open, but if you did have this planned, you could have taken it short here for a tight loss if we did end up rallying, but we rallied into the open and then immediately rejected down all the way down to our key level of $92, and then we were kind of basing there for a while, and then we ended up rallying slightly before the market came down, but we always held that $92 price range. So that's using a key level that we have. So that's a good take profit area. If you did end up going short, you could have taken that from this 94.55 area and then taken it all the way down to $92. So that was a quick recap of just some of the supply and demand trades. I did have one personally myself today on BABA using the key levels area. So 265 and 268 are two key levels for BABA. So we have a 4-hour demand down here, which we hit on at the end of the close on Wednesday, and then we gapped up on Friday or today, Thursday. And then we had this big rally here, and then once we got above this zone, you can see volume spike. I'll go into a smaller time frame just so you can see. So on the 1-minute time frame, I don't use this for trading, but just to show where I actually got in. I got in right here after we had based on these first 2 minutes right here at the zone. We were holding that zone and then got in right here at the start of this candle at 9:41 for the 270 calls. Looking for 268 as my scale out for scalp. So I got in the 270s for $1.17 at the 265 key level break. You can see here we had volume pick up as we were in that key level. So that showed a bullish sign that we would continue compared to where we were down here. Once we hit and broke above that 265, we had strong volume, and then even all these zones we were higher than we had been down here. So then took this long here, had a good pump up. We hit the 268 here, which could have and probably should have taken profit. I was trying to see if we were going to base out and rally above, but we did drop a little. Still was confident watching price movement, and we were holding this zone here. So if we did drop below this consolidation zone, I would have exited. So that was my exit strategy, which still would have given me a little bit of profit, but not much. But we still kind of stayed in this zone, and then we hit 268 again, and then I exited for 100% return right around here on this candle when we started showing weakness. So we had this rally, and then we showed weakness here and kind of leveled off before we then dropped below 268. So I exited my 270 call this week expiration. Should be at the 280.68 key level. So exited here for a 100% return. I think the best I could have gotten was another 5 cents per contract. So that was a good trade today, just using key levels and looking at volume and price movement. So you can see BABA the rest of the day dropped, held the 265 key level, and then failed to get above 268 the rest of the day. So this could have been trade that you could have taken between trading these zones in here. So key levels are another good way to use for scaling out, as well as if you're playing supply and demand. So if you did have this here, I don't think we had any demand to like supply to like 280. So if you're not in long expiration contracts, you wouldn't want to keep holding this out of this demand. But for a quick weekly scalp, this was great between these two key levels. So if you found this informative or helpful, please like and subscribe, and please let me know in the comments if you have any questions or any other future videos that you would find helpful. Thank you. Have a good day.